Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully you've all had a fantastic Friday so far. This is just going to be a short and sweet cryptocurrency market update. We're going to be diving into Bitcoin, reiterating and going over a little bit that we went over in yesterday's video that came out later on when we were talking about some of Jamie Dimon's comments. And a lot of people were saying, oh, don't trust whatever the bankers are saying. I literally spent 20 minutes telling you why he had a point and why it was likely that there was a hurricane coming towards the economy. In fact, on the doorstep of the United States economy, and of course, this is going to be echoed throughout the world. So we're going to be reiterating that a little bit. It is, of course, the non-farm payroll. I think it's the non-farm payroll today, which is when the US released data on the labor market, the jobs market. And essentially, lots of economists are expecting a kind of downturn in this. And this has been Jerome Powell's main go-to for a kind of permission to really up interest rates. He's kind of saying, look, we have a tight economy, a tight labor market, so we can go ahead and do what we need to do in regards to upping interest rates. And it's not just, we've had a number of things come out. Elon Musk, for example, wants to cut 10% of Tesla jobs. Major crypto firms also looking to cut 10% of staff. It really kind of echoes the period that we're in. And what I'm going to do whilst we're looking at Bitcoin, and we'll look at it, we'll drop down the time frames because I think you're coming down for Bitcoin today. I'm going to show you Apple in 2017, which is when we went through a very similar, and we've been talking about this, guys, for a long time, well before all these other crypto Twitter people were even looking at Apple and comparing it with or Amazon and comparing it with crypto. Something we did from the start of the channel and have maintained consistently. This is essentially what the future of Bitcoin looks like, in my opinion. Because this was obviously in the 2007-2008 financial crisis. I think we're heading into a bit of a similar period, and this is ultimately how I think Bitcoin is going to look and recover going forwards. It's not over for the cryptocurrency market, ladies and gentlemen, and people think we're bearish. On the contrary, we're absolutely bullish as can be on crypto. Long term, short term, I just think we're in for a bit of a sticky period. Let's kick things off with this article from Fed Chair Lael Brainard, saying it's very hard to see the case for the Fed pausing rate hikes. So for a while now in crypto Twitter, I'm getting absolutely sick of Twitter. I mean, it's just a pissing contest, really, with who can basically spam the most tweets and attract the most people to their channel, even if those tweets don't really warrant anything. It's the same with YouTube. It's a really low caliber, excuse me, guys, of individuals that have big accounts and big YouTube followings that actually put content out on crypto. Very low caliber individuals that don't critically think about anything and just regurgitate nonsense. I feel really bitter saying that, but the more and more I see of it, the more and more I actually am kind of like, I don't even really want to be on Twitter. However, it's a necessary part of any kind of growth. You can't not be on social media. But anyway, rambling on now, guys. The Fed chair, Brainard, is talking about how essentially they're not going to pause in September. It doesn't look likely with inflation being where it's at. We've said this. Everybody jumped on this bandwagon and went, right, okay, that means they're going to pause in September. Let's take that information and say that we've already priced in and may have even overpriced in rate hikes into markets. It's one reason actually why you saw, and we'll come back to Apple in a second, the likes of the NASDAQ actually see relief, the likes of many other markets. We've also had a very weak, the dollars ran some significant targets. It's now having a bit of a rest. This is going to come back, ladies and gentlemen. If you understand what's going on in the FX market, you'll understand why this comes back with a vengeance, because the other currencies that it's pegged against are weak. You got to remember the European Union, or not the European Union, the ECB haven't even started to up interest rates yet. They're still on zero interest or negative interest rates. So the dollar is going to see strength. This is going to be bad for all risk on assets. In yesterday's video, we covered the JP Morgan CEO's comments, Jamie Dimon's comments, talking about there's a hurricane coming. We covered it in great detail, and everyone was going, okay, don't trust bankers. Yet you absolutely should not trust bankers, guys. But Jamie Dimon absolutely has a point when he's talking about what's coming for the economy. If you didn't watch the video that I put out at around about 7 p.m. UK time yesterday, so after our daily cryptocurrency market update. Well worth a watch, because we're talking about how trouble is coming. We looked at the Fed funds rate. What happens when an increase of that happens? Usually a recession or a downturn follows, a significant downturn follows after. We also looked at the likes of the yield curve and a number of other things, not only explained them, but tied them into this thesis. So not only did we bring up Jamie Dimon's comments, we said, actually, we support what he's saying here. We don't support bankers or anything like that, but we certainly support what the likes of Jamie Dimon is saying in relation to the economy and where it's currently at, and likely where it's going. And this is why we pull up the schematic that we do with Amazon, Apple. Amazon had a similar thing, by the way. You can actually use Amazon, but Apple, I think, highlights it more clearly. That this is quite likely the play that I think is going to happen. This, of course, 2018 financial housing crisis. This is what I think Bitcoin's future is going to look like, guys, moving forwards. You know, and we have said this for a while now. You come down, you do something like this. Not calling for 14K, by the way, guys. We're calling for more downside before we get that upside. Again, calling for coming down to these lower bands of the long-term regression before we see some kind of a bottom, and then we get that continuation in a similar manner to what Amazon did. Or Apple did, after the 2008 financial crisis, and we see that recovery. So essentially, what she's saying here is that there was quite a few people saying that they were going to maybe decide to do a rate hike cut in September and not so aggressively go after chasing down inflation. It was one individual that actually said that. I can't remember quite who it was. It was Raphael Bostic, the Atlanta Fed president, who essentially said, look, we may take a break in September. Jerome has said on the contrary. Even Biden came out and said, we are going to 100% back Jerome Powell, and congratulated him in regards to trying to tackle inflation. And they do that via upping interest rate hikes. Every time in 2008, they literally nearly destroyed the damn repo market because they started upping interest rates, and they had to really pivot. That led into March 2020. It's very coincidental that we had March 2020 and it saw markets take the kind of tumble that they had, even though there was all the signs that something like that may have been coming anyway. And we also spoke about the yield curve happening, I think, 6 months prior to March 2020, and how it was kind of very coincidental, everything that went on. But we're taking that conspiracy hat off for the moment. It's at the end of the day, guys. Yeah, we can all have our own personal opinions on conspiracies and all this sort of stuff, but ultimately we want to deal with concrete evidence. And I'm not saying there isn't any concrete evidence for many of these conspiracies, but in terms of looking at markets, we want to deal with what we've got in front of us. And what we've got in front of us is an extremely unaccommodating Federal Reserve and economic conditions that I don't think are going to help the cryptocurrency market or the equity market. And for the equity market, you know, crypto saw a little bit of a run up yesterday. Really what I'm looking at, I think we've still got the draw on here, is a support and resistance slip. So this was previous support. Now come up. We may even see a deviation, and then we get that crashing. And ultimately, you know, I think markets want to go. I mean, this was, I saw somebody on Twitter yesterday going, all the bears are wrong because the markets rallied. This was the most anticipated relief rally I have probably ever seen in my 5 years of looking into markets, certainly for the stock market. And I think reiterating our bias that any kind of strength that we see in this market gets killed because of the macro backdrop. Still the play, still the game plan that we are playing with. And we did say that in regards to the cryptocurrency market, and we'll drop right down the time frames, you may be looking for, you know, some sort of continuation. One area that we really want to see get hit and deviate from, this would be my perfect short if crypto did this. Deviate here, you know, we get a run up, we deviate here. There's so many people looking for this though now, and we've got a number of reasons why we're looking at this for a deviation. We've got our volume by price indicator. Let's get to the daily. We've got our volume by price indicator that sits right around here. We've also got a prior high, and it would be kind of a support and resistance flip. That may not be the case. You know, crypto just does not seem to be catching a break at all. And I'm going to get a cleaner chart up here, guys. You know, what I'm looking at today, it may not. You guys got to remember, to call the markets intraday is extremely hard. But the likelihood is that Bitcoin comes back down here. If you go on my Twitter, guys, when Bitcoin was here, we said it's likely you're coming down here. That seems very likely to me, given how markets have opened. The FTSE opened down today. You've got your S&P 500 ETF that is slightly selling off. Let's actually take a look at the S&P 500. Is this just a textbook support and resistance flip? Potentially. In fact, I see scope for that. Doesn't mean that we can't go slightly higher and deviate, but ultimately, from an investment point of view, we're not looking to get into these markets yet at all. We want to wait until the macro backdrop has changed before we start to invest. Quick update on my paid membership group, guys. Hopefully, we were trying to launch it before the weekend, but hopefully we're going to get that out on Sunday. Just tying up a few things, putting together a little bit more literature. It's going to have 3 tiers. The first tier involves the Patreon posts and of course, a newsletter. Second tier involves significantly more. And the third tier is all access, which involves, potentially a couple of weekly meetings with me, monthly meetings, and of course, all of our altcoin lists, altcoins that we think in the next cycle are going to 100x, etc., etc. And you're going to get all that. And it's something I'm really excited to be delivering because I think I've got a good scope on this market in regards to where it's going, where it may look to bottom, and then what comes after it. And we're going to be giving you guys all that information, not only giving it to you, but embarking on that journey with you and investing right there alongside you. So that's really all I've got for this video. Let's see what the job growth data comes out in. Very interesting and very telling of the kind of economy that we're in when you have people like Elon Musk, who's supposed to be like a savior of sorts. Not convinced about that myself. Talking about how he wants to cut 10% of Tesla's jobs. Also, your major crypto firms reportedly cut 10%. And in yesterday's video, I know that bankers aren't to be trusted, guys. You definitely don't need to tell me that. That's one reason we created this channel and one reason we're such fans of Bitcoin. And I'd mentioned that we were rereading The Road to Serfdom by Friedrich Hayek. We understand that bankers are not to be trusted better than most, I think. But one thing that we were highlighting is Jamie Dimon's comments were exceptionally warranted when you look at what's going on. Look at the Fed funds rate. Look at what happens when it goes up and what the economy does after it. Typically, certainly look at it from 1999 onwards. There's obviously differences in period of times, but typically whenever you get a Fed funds rate rises, it spells downturn for the economy across the board, whether that be jobs. What you got to understand is when they up the cost of debt and the whole system is based on debt, it kills off growth. It destroys it. I mean, think about from a individual point of view, how many people owe debt? Some people, many people, in fact, and credit's not been a bad thing necessarily because the 23-year-old wouldn't be able to go and drive around in a brand new BMW or Mercedes if it wasn't for credit because they wouldn't save the money. But that debt becomes harder to service. Your housing payments, companies also have significant amount of debt, so everything goes up with that. And this is why you see the likes of Tesla and major cryptocurrency firms looking to cut staff because they want to save money because everything's becoming more expensive on top of inflation. Very challenging period for the economy, and people don't like that we kind of have this stance, but I'm just being honest with what I see coming in the future, or what's here and what is we're kind of moving towards, and we just get more and more confirmation that the hiking cycle that the Fed is on is going to remain, and people are they're looking for a savior right now in markets. Yeah, so every time somebody comes out and goes, oh well, we might only just do a 25 basis point and we might stop in September, people go, all right, great, everybody, it's a risk on period now. It's not, because everything contradicts that 100%. And it's, as much as I want to get off Twitter, I don't really feel like for somebody that's got a channel that wants to grow, Twitter is huge. It actually can be a great source of information, but the caliber of individuals, crypto individuals on there is just shocking as far as I'm concerned. And I'm not going to name anybody specifically. You do have some amazing people out there, but the general caliber, it's like, it's interesting. Anyway, that's all I've got for you in this video, guys. If you've enjoyed this content, a like is always appreciated, so is a comment. Quick recap on the daily. I think we're coming down, and we showed you where we think we're coming down to. This could still be the play. We just don't know, and we'll see what progresses. But for me, I mean, we put a couple of longs on yesterday. I closed them all last night because I was like, I just simply don't, we've seen so far that any kind of strength this market shows gets killed off quickly. We need to see that strength persist and continue before we flip our bias, and that doesn't happen overnight, guys. All I've got for you in this video. If you enjoy the content, like is always appreciated, so is a comment, and I'll catch you all in the next one. Thanks a lot for watching, ladies and gents.